Thanks for tuning in to Look at My JPEG, the podcast that discusses NFT, DeFi, and NFT financialization. This is your host, Xerox Jose, the founder of NFT Perp. The reason why I want to do this podcast is because there's just not enough people talking about NFT financializations. In this podcast, you can expect us to invite guests that are builders, founders, even investors that are deep in the NFT financialization space. We'll discuss their story, what they're building, and how you can get involved. So thanks for tuning in. Welcome to another episode. Today we have a special guest, the team behind Wasabi, a decentralized NFT options protocol. Get ready to dive into the world of NFTs and learn how Wasabi Protocol is revolutionizing the industry by allowing you to capitalize on the market swings, hedge against downturns, and earn premiums on your high-value JPEGs. Let's get started.
Hey, good morning.
Good morning.
How are you?
Doing well, thank you. Do you guys also want to get your Twitter page, like official Twitter page, on perhaps as a speaker as well, if you have an extra phone? If not, no worries. But typically, it just kind of, for the live listeners later on, it gets you a little bit more exposure for your Twitter page, and for the ones that do the replays, because these are recorded.
Okay, yeah, let me message them and see if we can do that.
For sure. But yeah, while you do that, welcome everyone for coming on to the 16th episode of Look at My JPEG. It's been a amazing couple of months. I think we started this back in perhaps in April, May last year, and grateful for the listeners. People will have listened on our stuff on Spotify, on Twitter Live, including you guys right now. Just a quick shout out to the listeners for supporting us. And today we are excited to have the teams from Wasabi. Love the name. Wasabi is a protocol that focuses on NFT options, calls and put options. We have one more guest actually that's joining us. We'll bring that person on. So why don't we, before we hop into it, maybe you guys can, the speakers, three of you can give us a quick intro of yourself, who you are, and then we can dive into what Wasabi is afterwards.
Sure. Great to be here. Thanks for hosting the spaces. So I'm Eren. I'm the co-founder and CEO of Wasabi. I'm a computer engineer by training. Then I had the opportunity to scale to startups after school. And I've been investing in crypto since 2016, but it's mostly been Bitcoin and Ethereum. And in September 2021, I had the opportunity to get into NFTs. I was actually gifted one. And after that, I just fell into the rabbit hole because I come from a family of artists and I've always wanted to have a sustainable way of supporting myself through my creative projects. But up until NFTs, I didn't see a way to do that. And that just like being introduced to NFTs just blew my mind, and I just realized that I wanted to be in the space.
Nice meeting you. Thank you for. So, quick question on your intro. You were given an NFT. What NFT was that, and do you still have it?
I still have it. It wasn't an interesting NFT. I think it was like either Paradise Trippies or the collection before that. I don't even know what the floor price is trading at right now, but that NFT itself is priceless to me because it just opened up this whole journey.
I love that. Yeah. Some of these NFTs are sentimental for sure.
Yep.
Oh yeah, I'll go next. Nice to meet you all. I'm Hassan. I'm also a software engineer. Like I've been coding for about 14, 15 years now. I've kind of dabbled in every different space. I've did websites, crawlers, games, apps, protocols, and I've been kind of in the Solidity space for like 2.5, 3 years now. And what I love about the space is that um, in like in you can make like complex financial structures in the basement of your home, right? Like you don't need like these you don't need to be working at a huge bank or whatever to build something as complex as options. You can just like do it at the comfort of your home and kind of make it more available for everyone.
Absolutely. Code is law. I think that's one of the reasons why you brought in that application level, finance level of minds into the space over the last, 2-3 years. It's fascinating. Great meeting you as well. And you have one more person on your team I'd like to share.
Hi guys, I'm Mason. Thanks for hosting this. I come from a finance background. Worked at a bulge bracket bank before going to a hedge fund. And then now, fully in Web3. I've been in crypto since 2015. I bought my first Bitcoin. Then I got, kind of in and out, and then got super into DeFi in 2019, shortly after there, NFTs, and then kind of have been around the space and fell in love with it because it kind of mixes art and finance and culture and everything into one, which I love. So
Yeah, I think I can relate to that quite a bit. I think a lot of us have that similar segue into crypto in terms of our different journeys of our lives. And how did you all meet? Curious.
So it's interesting. I first met Hassan when I first moved to New York right after college. It was the heart of COVID, and I feel like everyone hated their jobs at the time. Hassan was like super driven. I actually did not have a house back then. I didn't know where I was going to stay in New York. And he was actually working on a side project. So we're both international, and we built a like TurboTax for applying for an international work visa in the US that we called FileFill. And we got along really well. And then we started building Wasabi together. And in this space, I've been meeting a lot of people, and I had the opportunity to meet Mason at an event actually, and then we hit it pretty well, and then he joined the team.
Gotcha. Amazing. I wanted to just kind of shift gears a little bit and perhaps let's shed some light on what is Wasabi and what was the origin story that kind of inspired you guys to build what you've built.
For sure. So, like I said, actually, it was December. It was December 2020 when I got introduced to NFTs. It was September 2021 when me and Hassan, we decided to build something in the space, because although the space was growing really well and really big, we realized there were a lot of rug pulls and wash trading. So in order to build any kind of powerful application, we started building by aggregating data. So now we have a data aggregator that can pull in all transaction data as well as listings. But seeing that information was not enough to solve the problems that we're seeing in the field. And after actively trading for a year and actively building in the space, we identified 3 problems. And I feel like these problems are very similar to the problems NFT Perps is trying to attack. Namely, you can't get affordable exposure into blue chip collections, and that's where most of the value is. You can only buy low and expect to sell high. You can't hedge your NFTs, or like you can't purchase insurance on them. And then lastly, you can't generate any sustainable interest on these NFTs. You just buy them, they stay in your wallet. If you're lucky, they go up in price. And in order to attack all of those problems and to attract more liquidity into the NFT markets, we conceptualized Wasabi, and we've been building it for the past couple of months.
Got it. That makes a lot of sense. Quickly want to double click on the data aggregation and stuff that you talked about in terms of indexing. And just going off track a little bit. Are these on-chain events, or are you guys calling these data, aggregating it via APIs?
So basically, we are fetching block data, and we're fetching every transaction in a block. Then, following where the NFTs and the money go, we can figure out who's selling which NFT to whom. We can see mints. We can see which NFTs were sold together at what time, and basically, normally, the more sane way to do this is to track events. So if there's like a sale on OpenSea, they emit an event, and you can view that and record it. However, they change their protocol quite often, and there's a lot of new marketplaces coming in every month. Especially when we're building this, there's a new marketplace every other month. So we want to build something that was more generalizable and abstract, so that once we see a sale happening, and a sale meaning the transfer of ETH and a transfer of NFT, we could record easily. So we basically built an ingestion system that way, and it's been recording ever since.
That is very interesting. And are these stored on a database that you guys host?
Yeah. So we built this, and then the block data is stored actually in raw files, but the transaction data, we store it in a regular SQL database. Yeah.
Mm-hmm. Yeah, that makes a lot of sense. I'm asking this because we've gone through the route of doing similar things with different approaches. So I'm just always curious on how other builders have approached similar data issues. And, NFT data, it's not the infrastructure, the overall landscape is so new. A lot of things you have to create yourself. So it's cool to see you guys, creative with that. Yeah. Okay. So Wasabi, why don't we get into the details of it? How would you guys describe Wasabi to someone that perhaps understands a little bit about DeFi, are kind of interested in NFTs, or vice versa? And we can get into the use cases after that.
Sure. Wasabi is a fully decentralized and permissionless options protocol. As a trader who wants to get exposure into blue chip assets that have high floor prices, or any kind of assets, actually, it's permissionless. You can log into Wasabi. If you think the price is going up, you could buy a call. If you think the price is going down, you can buy a put. And if your estimation is actually correct, you can end up just taking profits from your accurate estimation, or you could actually end up purchasing or selling an asset to the pool at a different price than the market. And then on the other side of the trade, we have big collectors or big DAOs who have a lot of NFTs in their treasuries who want to make money. This could also be individuals. You deposit assets into Wasabi, very similar to Uniswap or SudoSwap, a pair, like a collection and ETH. And then by issuing options on them, you collect premiums. And what we've seen on testnet is that you're actually able to make up to 47% annually by providing liquidity to Wasabi.
On both your ETH and your NFTs, say like a cover pop call option.
Exactly. And all options are covered. There is no major risk of defaults or anything.
There's no risk of default.
Yeah. So it's very safe, and we believe that this also applies to a bunch of other protocols. We think this is a different way of hedging and speculating compared to NFT perp. And we feel like these two products can actually be used simultaneously to de-hedge your positions in either of them.
That is really interesting. I'm fascinated. I think I have come across different NFT options protocols out there. In fact, I think one of the listeners at the moment, Bull v Bear, I think they're another NFT options protocols. that we love to invite on, later on for future episodes. But with regards to NFT options, there have been different iterations of how teams have tackled design thinking in terms of UI, UX, in terms of the flow mechanism of the protocol. You mentioned the keyword early on that there is a design architecture of a keyword pool, as opposed to what we've heard up to this point with most of the NFT option protocols have been iterating their design has been P2P, direct buyer, direct seller, in terms of underwriting a put or call option. Are you guys doing similar things, or is that completely different?
We're almost doing a hybrid approach where we're peer-to-peer as well. But what we do is you deposit assets into a pool with a certain set of rules on the options that you want to issue, instead of just defining an option per asset, because NFT prices are very volatile. So if you statically price your option premiums, then it's very likely that on price jumps, your premiums are not going to reflect the actual price that they should have. So with Wasabi, your options are priced dynamically. You enter a certain parameters, you deposit assets, and then whenever a trader logs on the front end, a specific number of potential options with varying expiration dates and strike prices are rendered automatically. And then once a user chooses a specific expiration date and a strike price, then the option is minted as an NFT, and the holder has the full right to either exercise it, trade it, or burn it if they want to.
Yeah, but basically, it is peer-to-peer in terms of where one of the peers is the pool that LPs create. And the best part about this is that you can kind of create your pool and let it be, and it'll become like a money-making machine for you.
Really interesting. So when you said earlier that, let's say I am a put option writer, meaning I am, let's say I have some ETH as a liquidity provider. I would love to provide some put option that in promise that I would buy certain NFTs at a certain prices, and I open a pool, and this is my premium that I'm trying to collect, and this is the strikes that I'm providing. Does that effectively go into a limit order book almost? So if I have different tranches of, let's say, strike prices with premium, I specify that will go into a book, and then that book is then automatically rendered for users that have the NFT will come here and to purchase a put option. Is that how it works?
Basically, so once you create your pool, there's a couple different ways, but currently the initial way is, as I said, you specify your parameters. And what happens is you set in, basically you sign transactions for your pool to issue options. And this way, you don't have to pay gas in order for your pool to create these options for you. And then basically you can technically enlist 100,000 options without paying a single way of gas. So this is great because there seems to be an order problem, especially with illiquid assets, meaning that, let's say you want to buy an option, you come in and you only see 2 call options available, not for the date you want and not for the strike price you want. Are you going to buy it? No, right? You want to have a lot of options on these options. So you want to have a large range of strikes, large range of expiries. So what we basically do is with a single signature, you can issue any option between the range you specify, giving traders the opportunity to buy any option they want.
Interesting, but the keyword here is you have, let's say, this entire put option in terms of the covered let's say the strike amount is 1 ETH, right? Are you effectively saying an LP who has 1 ETH could sign a signature up to, let's say, 10 ETH worth of contracts, even because they're not minted yet, that the trader can essentially get into different pricings that they want?
Exactly.
Oh, wow.
The LP just needs to deposit the amount of liquidity or assets they want in their pool. So if you put in, let's say, 10 ETH to your pool, you can issue 10 1 ETH strike put options, or you can issue 2 5 ETH put options. So basically, the pool is very dynamic and it uses the liquidity within. This makes it secure for everyone, like fully covered, and also fully self-custody, because you can like withdraw these assets and liquidity anytime you want from your pool.
Interesting. Okay. I mean, we're kind of getting into, and this has conceptually in theory, it has some overlap with some of the lending and borrowing protocols out there. Because some of them would like to define some lending and borrowing protocols out there in NFTs as put options, right? As a lender, you're providing liquidity upfront for a borrower, putting down the NFT, being covered in for a predetermined premium. So this is incredibly interesting. Okay, tell us a little bit more about the protocol. Where you guys are at so far? What are the, I guess, like challenges you guys have faced so far, and how has traction been? And yeah, we'll love to dive into all of that.
Yeah, for sure. So as mentioned, we've been building the protocol for the past couple of months. Also, just want to make a small comparison between us and lending protocols. We don't really collateralize NFTs once we give cash, right? Like with our put options. We just collateralize the ETH amount in the pool. And someone who purchases a put option does not necessarily need to have the underlying NFT. If they're ever in the money, they could purchase an NFT from the market, sell it to the pool just to take profits. Or if they own the NFT, they could just purchase a put option as insurance. Or like if you're someone who's lending, you could purchase a put option as a credit default swap almost, if you're scared that the person you're lending to might default and you might end up with their NFT. So that's like the slight difference. But as mentioned, we've been building the product for a couple of months now. We actually launched on mainnet. We launched on testnet a month ago, and we've been seeing some really good traction. We have around 1,000 users, fully organic. I think yesterday we had a total of 16,000 options sold. And on top of that, we have above 150,000 demo ETH trade volume generated. So hopefully these numbers will reflect on the mainnet. But what we're seeing is that the product is definitely sticky. A lot of people that are using it are coming back to use it again. And people are spending a lot of time on the protocol. So very happy about those.
Yeah.
And also, yeah, like some of the tough stuff we had faced has been mostly related to testnet. It's a very unpredictable environment. But yeah, basically, you come into our Discord, we give you free Guarly that you can use to pay gas fees with. Then you go onto our website and mint some demo ETH that you use to trade with. But along with all this, like streamlining this onboarding process was probably one of the most difficult parts. But right now it's working like a solid machine.
Yeah, and I mean, before the episode today, I went into your Discord and kind of played around a little bit as well. I love the bots you guys have built for requesting Girly ETH and also getting whitelisted. It's a very, very seamless process. So good job on that.
Yeah. I think like we definitely got inspired by a lot of other protocols that did trading competitions. We kind of researched like you guys and like some other websites as well, found the best stuff, and like try to compile them. And I think this can be like any new protocol that comes on, like should definitely focus on like having a really easy onboarding process, because that can kill a lot of new requests. Like if people want to come in, if people want to see what's going on, if you don't have a nice smooth transitioning process, then they might not want to stick.
100%. I think UI UX is one of those things that it's incredibly important in terms of clarity and optimizing that, quote unquote funnels from people learning about your product, coming into your Discord, to community, and take that call to action, that the steps you want them to take. The less friction there is, the more conversion you get, and the more stickiness you can create as a product. So we can fully relate to that. So curious, when I was going through your documents, I read about these NFTs that represent these contracts could also be traded and could have a marketplace around them. So can you maybe speak to us a little bit more about that? How are you guys thinking about how that will work? And then I have another question to follow up for this.
So we kind of conceptualize this idea of meta markets, meaning that it's a little meta, but basically once you buy an option, you actually get an ERC-721 token that represents your position. The metadata of this NFT actually has the properties for your option, meaning that you can see the strike price as a metadata, like as a trait. You can see the type of option, like call or put. You can see expiration, which underlying NFT is this option for, which token address was this paid for, basically all the details. And we believe that this is also a perfect case for NFTs themselves, because you are representing ownership for this position that we issue. And another great thing about this is that since these are ERC-721 tokens, they're very easily tradable. They're very easily supported to be traded on other marketplaces, right? Like right now, without doing any other thing, except for going in and like changing the profile picture in OpenSea, like we didn't do anything, and now you can go trade the Wasabi options on OpenSea. However, we're also building an exchange right now where we will allow secondary sales of these options, because once we do that, the options market is going to become more liquid, and people will be able to trade, like do day trading almost with these options.
Yeah, because I would imagine like I can't speak to traditional finance or perhaps more on the DeFi side. What would you say? Are you guys targeting for more secondary markets on these contracts volume as a protocol, directional revenue source? Are you mostly, hoping that the underlying contracts being minted, being purchased, being sold is your main revenue source as a protocol? Like, what are your thoughts on that?
Honestly, we would prefer to have more secondary sales, because we're going to have like just a small, like the same transaction fee that we apply as the royalty fee for these NFTs, and share them with the LPs. We want to make it so that holding an NFT, now you can like make money, right? Like you can use your assets to make money and generate yield. But basically, we would prefer to have more secondary sales, because that's going to increase trade volume. That's going to make the protocol better, and it's going to make it more liquid, most importantly. So we're kind of banking on that side of things.
It just creates a more affordable sub-market. And like going back to the idea of meta markets, we've seen initial applications of that in Uniswap V3 pools. Like if you deposit assets there, you get an NFT that represents your position. And by representing these positions as NFTs, you make them tradable, and you actually can interact with them in more complex ways. So like in theory, you could put options into a pool on Wasabi and create options on options if you're like super degen. Or you could even create ERC20 token options by using Uniswap V3 pool tokens.
100%. I think these are when things get a little deeper, and it's very, very fascinating, very interesting. For example, I was speaking with a team from Astaria, and they're exploring financial NFTs being sort of like collateralized in NFT and lending and borrowing, where LPs could provide liquidity and take on these financial entities as collateral and give out loans to liquidity providers on Uniswap E3. And the underlying position that's generating fees, because you're providing Uniswap V3 positions, the fees would essentially pay off itself on the loan terms on premiums. So it's like a put option almost for Uniswap V3 positions. That itself, the contract is also the promissory note itself is also an NFT that could be deposited into your protocol for perhaps a call option. So there's a bunch of stuff that wraps around. It can create these interesting loops that we're excited to see, what could be turned into. And the amazing thing is, like, all of these stuff on chain. That is just incredible. So love seeing that you guys have that vision and how you're thinking about tackling these type of things. So as a user, curious, if I hold, let's say, a put option contract, I purchased one, and I'm in the money, but let's say the expiry date is tomorrow, and I forgot to exercise my option. What happens to those contracts?
So the options that expire will be kind of rendered worthless, which is unfortunate. But once you buy these options, technically you are buying a contract and signing this contract saying that you have the right until the expiration date. So it's kind of your responsibility to exercise these options or trade them or sell them. However, like, we're working heavily on making Discord bots, Telegram bots, and also other kind of notification systems to warn users that their option is going to be out of the money, in the money, they're expiring, stuff like this. And basically have them on our platform and act a day before, 2 days before, 5 hours before, stuff like this.
And the reason why we went with this approach in our architecture or in our design is because we want the option holder to have the last say on the settlement instead of a price feed. Like, there are a lot of intimidations on NFT floor prices. Like, we've seen events from Franklin's board where, like, the floor prices can be intimidated very easily. And in order to solve that on the like settlement layer, we want the users to actually exercise their options only if they know for sure that they want to exercise it.
That is really interesting. Have you guys thought about, like, interesting stuff? And this is, of course you have, but from an outsider point of view, like, would something like signing off approval for a liquidity pool to provide any sort of underlying similar NFTs for a bot to exercise my option? Is that even a thing?
I mean, you can create a bot that exercises these options for you automatically. You can have like a MEV bot that trades these. Honestly, you can do any of these, and we're building the protocol in such a way that anyone can interact with any pool. They can't interact with any option because you need to own it. But basically, it would be very easy to write a bot that exercises your options or trades your options to make like substantial revenue.
Mm-hmm. Yeah.
And another flow we built is an arbitrage trade flow. I don't know if we talked about this, but basically, this is kind of like a separate tool that we kind of created for users to exercise their options way more easily. Because right now, if you want to exercise a put, right, you still need to go buy an asset from the market if you don't own one. Then you need to exercise and then sell it to the pool. But this kind of presents some challenges, like if the underlying asset, let's say it's a Bored Ape, you have a Bored Ape put option and you're betting on the price going down. And your bet is right, like you're killing it right now. Basically, you will have to purchase one for 70 ETH come and sell it to the pool for, let's say, 80 ETH and like pocket the 10 ETH difference. However, you might not have 7 ETH, right? So that's a big problem. Like, what are you going to do now? Obviously, you can sell your option to someone else, but as you said, if there's like 2 hours remaining, 3 hours remaining, it's probably better and easier if you exercise it. So what you can do is use our arbitrage trade tool, which uses flash bots actually to take a loan in a single transaction, purchase the Bored Ape, exercise the option, sell the Bored Ape, pay back the loan, and then pocket the difference in a single single blocks transaction. This way, you don't pay a single dime out of your wallet to kind of make this happen, and you can easily take in your profit.
That's sick.
And we want to have like communities build tools like this with us, and like we want to like put them up in our website. It could be like, as you said, maybe someone can build a Mev bot, someone can build like something like that they can come and like kind of share it with others. We basically want people to be like we want to build this as permissionless as possible so that anyone can build cooler things on top.
Mm-hmm. That is really, really interesting. And to kind of like also add on to that, I think like, a lot of protocols out there that have been, dealing with NFT lending and borrowing, for example, like they've thought about like, oh, like what if I would like to have my NFTs still be eligible for airdrops? I can still claim them if I need to. So even stuff like, hey, if I'm providing a call option as a cover call, being the liquidity provider, when I have this NFT, but hey, there's an airdrop coming up in 2 days. Can I flash, take out the NFT, claim my airdrop, and then put it back into the contracts? Like, these are the things that builders like ourselves need to think about long term to be as agnostic as possible, right?
Interesting. Yeah, that's actually that part. We were thinking about figuring out a way to prove ownership through pools. But what you just said actually just gave me an interesting idea. You can base this, you can create a structure like the Aave flash loan structure, like the interface, to create a tool like this actually, and prove ownership during minting process within a single transaction, so no contract is breached.
Yeah, that's amazing. I love how creative you guys are, and really congrats on the traction you guys have so far on testnet. When is mainnet? When are you guys thinking about, like, when would you be ready? What would you like to see on the testnet in terms of metrics, data, feedback, for you guys to feel comfortable to go on mainnet?
The results we've seen so far are already gave us a lot of confidence, honestly. I think we went above and beyond what we initially imagined we would see on testnet. We're like already very excited about going on mainnet, and we think the technology is almost there as well. We have our audit scheduled. We're looking into doing things in a correct way through legally as well. So we believe around the end of March is going to be the right time to go on mainnet.
Got it. That's pretty soon. Excited for you guys.
Thank you.
So when I was also going through your docs, I also read about that there's an NFT collection coming up. Can you tell us a little more about that?
So that's a surprise where we like to keep certain things under mystery. So you're gonna have to stick with us and see what the NFT collection is about.
No problem. Appreciate the teasing. Well, I think I've covered most of my questions. Is there anything that I missed that maybe we should have brought up?
No, but to your previous question about like using Mavbots and things like that, Wasabi is building an ecosystem, and we like to have relationships with all the existing protocols. We think we're very composable and compatible. Like, I see a future where Wasabi and NFT Perp have structured products together where the issuers and traders are more hedged. Similarly, like lending protocols or other builders coming and building flows, such as the one Ice Cream Guy was talking about. So super excited about the future and super excited about building it together with you guys.
Absolutely. I think, personally speaking, I think in this space, code is commodity, in my opinion. I think when you can build a protocol that's as composable, permissionless as possible, it allows integrations, and it's ultimately the humans, like people like you guys, myself, other founders and teams that will win to come together and build together can win together. So definitely very excited for that.
Exactly. Thank you so much for hosting us.
Yeah, of course. Thank you for coming on. We're excited for the future for you guys. Really enjoyed our conversation today. For those that are listening, if you'd like to follow Wasabi on Twitter, I believe their Twitter username is Wasabi_protocol. So give those guys a follow. If you're listening live or listening to the recording of this, you can also follow MCAGs, Aaron, and Ice Cream Guy on Twitter. Thank you guys for coming on. Really enjoyed our conversation today.
Us too. Thank you so much.
Have a good one.
Have a great weekend.
You too. Bye.
Thanks. Bye.
Bye.
Thank you for tuning in to LookatMyJPEG podcast. If you're listening on Spotify or Apple Podcasts, wherever you get your audio podcast from, give us a like, a subscribe if you like the content, and we'll see you in the next episode. Cheers.